What's going on, YouTube? Welcome back to Goofy Investing, where we talk about investing into the stock market. If you've been following along in my channel, you'll notice that I did a video on ADMA. Little bit of interest there. So, with that, I decided to do quant analysis on price targeting. And as promised, here's that video. Okay, this video is going to be on Adma Biologics, ticker ADMA. Let's go to price action real quick. Year to date, it's up 282.96%. On the 1 year, we're up 372.95%. And on the 10 year, let me maximize this. Actually, on the max, we're up 102.93%. All right. So as you can see, stock going up. All right. Let's look at a valuation sniff and price targeting and gauge where this company is on their timeline. And I guess I'll let you decide if the juice is worth the squeeze. Okay. All right. So I'm going to maximize this so that for visual effects, so we have more of a visual on all of this. Don't be intimidated on the quant and all the numbers. I'm going to explain all this. But with that being said, let's get into it. So our 2024 projection is 57%. That's in line with consensus estimates. For year 2025, I have actually and I've actually disclosed this in my past video, in the chat and in the description, that I misread their revenue guidance, their forward revenue guidance. They were talking about adjusted EBITDA guidance of 33% CAGR. However, here's the new projected revenue for next year. I know, looks a bit low, but that's not a showstopper, okay? But let's continue on. All right, 2026, I got them doing 16%. 2027, I got them reaccelerating even more at 35%. And then they start leveling off at 25% thereafter. Okay. Why are they leveling off? Why do I think they're leveling off? How did I get these numbers? Okay. All right. So 2025, I'm actually just going off their guidance. All right. And then 2026, I'm sticking with consensus growth estimates. And 2027 includes the tailwind of the FDA approval of extended shelf life on room temp storage. With the calculations that I've done, their bulk yield of 20% that they've guided and maximum capacity for their upcoming milestone, right here, as you can see, I got them doing 35% in 2027. All right. 2028, this may excite some people, maybe not, but I think they're going to announce a buyback in 2028 as per their guidance, management guidance on their milestone. Although that guidance isn't put out to say, oh, in 2028, we're going to announce a buyback. It is part of that guidance, and this is how I'm interpreting that. Right here where it says maximize value, it says utilize strong balance sheet and forecasted cash flow to opportunistically maximize shareholder value. Well, I guess what can that mean? Well, I interpret that as a buyback. And I could be wrong. That could be a dividend or it could be something else. So, but probably going to be a buyback in my eyes. All right. So how do I got them? How do you say? Okay, before I get ahead of myself, this company is free cash flowing. All right. And before I come up with price target projections based on their net income margins, awarded PE, and so forth, we have to find out what share count they're going to land at. And we have to find out if there is a buyback announced in 2028, free cash flow projections that I've put up. Okay. So with the dilution calculation for the next 5 years, I got them diluting 25%, okay, of their current float. So from 232.6, 25% of that plus the original 232.6, we come up with shares outstanding of 290.75. All right. So how did I come up with a 25% share increase in dilution? All right. We'll go to financials. We'll go to income statement. All right. If you see their diluted weighted average shares outstanding for the past however 5 years, there's a lot of dilution. Now, I believe that this will slow down. I believe that this will slow down because they are now profitable and cash flowing, if you will. All right. So there will be a less need to dilute. All right. So that's how I'm thinking 25% is going to happen. All right. Free cash flow projections. All right. Um, I'm going off a formula off their current spread of 15% free cash flow margin. Or I'm sorry, I'm going off the formula of between a 25% spread between their EBITDA and free cash flow. For 2024 and 2025, I just got off their guidance, and I'm just going to assume that those margins are going to be the same. As you can see, in 2026, there's a drop off in free cash flow to a 15% free cash flow margin. Well, how did I get that, and why do I think that's a good projection? Okay, so according to management for their upcoming milestones, all right, so they're going to start an enrollment on another study. They're going to do advanced preclinicals and development into new drugs or what have you. So I'm anticipating an increase in SG&A here, and for the purposes of how do you say, a margin of safety, I think 15% free cash flow is probably the right number. If I'm wrong on the upside, probably. Okay. I did the calculations and added up those future free cash flows. I come up with 720.25 million. Currently, that's about 18% return on the current valuation. All right. And that's an energy contribution. As we'll go to the balance sheet. All right. We'll go to valuation on Adma. You see that they got 141.40 million in debt. If you've been following along, I do not like the terms of this debt. However, if a company grows, they will solve a lot of problems, and this is one of them. So if they keep bolstering up and stacking cash like they have been, we'll go back to the financials, we'll go back to their balance sheet. As you can see, on a quarterly basis, they have been increasing their cash from this quarter to that quarter, and management has given guidance that they are going to continue to add cash to the balance sheet. I love companies that stack cash on that balance sheet. All right. So, what are they going to do with these free cash flows? Well, it's probably going to, a portion of it will go back to a buyback. Some of it may go back to debt reduction and so forth. It's going to be up to that CFO and the chairman of the board and CEO, okay, on what's going to happen there. All right. So that's a good thing to look forward to. All right. Now, going back, now that we got our share count, we got our shares outstanding right here. Remember, this assumes lower dilution rate due to free cash flows and no need to raise capital via dilution as much. Okay. With their share count and the calculations on a base rate of a 20% net income margin, we divide their profits divided by shares outstanding. We come up with EPS of 76 cents in 2029. All right. We'll go back. We'll look at earnings and earnings estimates. I am actually below consensus estimates on my calculations. So, but typically, I mean, not always. I don't want to sound rude, but I think a lot of analysts are idiots. But that's just me. That's what I got them going on the base rate projection. And based on that, if we award a PE and assume that they hit their 20% net income margin and they maintain 20% forward growth, we should be able to expect premium PE commands of 30, 40, and 50 PE, With our EPS projection, we come up with our price targets right here. All right. And that's in 5 years. And this is just the base case. All right. Realistically, I'm pretty bullish on this one. So let's go to the bull case. 25% net income margin, calculation to their EPS to get up to 95 cents a share, and expecting 25% forward growth rate. This pretty much assumes that they have gotten a breakthrough with those preclinicals and new drug development from their R&D and upped SG&A, and they're going to continue to grow at a 25%. All right. We come up with probably getting a 40, 60, and 80 PE. This 80 PE is pushing. This assumes a euphoric market, okay, hungry for growth, and kind of where stuff doesn't make sense, and that happens. So this is possible, all right? So with the EPS projections, here's our actual stock prices, all right? Realistically, where do I think this is going to come in, all right? I think in 5 years, this is going to be a $45 stock. I think they're going to get a 50 PE. I think they're going to be in between right here, all right? That's what I'm getting for it. This was the video. I know, pretty short. I didn't want to keep this too long. I got a lot of people emailing me, asking me about other equities, and I actually got a barbecue to tend to. So here's the price target numbers. Comment down below. Do you agree with the numbers? Do you think they're too conservative? Do you think they're too bullish? If you have any questions about it, you can ask me down below. If you're interested in me taking a look at another stock, I'm all ears. I listen to the people. Shout out to Bash, Lynn, all the loonies, and all the people following my YouTube channel. I hope you enjoyed the week, and I hope you enjoy the rest of your week. But with that being said, thanks and have a good day.